The stock market, it's a term that evokes images of flashing screens, frantic trading floors, and fortunes made and lost in the blink of an eye. But beneath the surface lies a fundamental driver of global economic growth and innovation, a mechanism that fuels the engines of progress. The stock market is where companies raise capital to fuel their ambitions and where investors seek to grow their wealth, creating a symbiotic relationship that propels the economy forward. It's a dynamic ecosystem that reflects the hopes, dreams, and anxieties of the world, constantly shifting and evolving with the times. In this exploration of the stock market's fascinating history, we'll journey from its humble beginnings to its current status as a global powerhouse, highlighting the key events and innovations that have shaped its evolution over centuries. The stock market is like a giant game of Monopoly, but instead of boardwalk, you're buying shares of real companies, each with its own story and potential. It's a fascinating world where history, economics, and even a bit of psychology collide, creating a complex tapestry of human behavior and financial strategy. From its early days in bustling trading hubs to its modern incarnation as a digital behemoth, the stock market has always been a mirror reflecting the world's economic pulse and societal changes. As technology advanced and globalization accelerated, so too did the stock market, adapting and evolving to meet the changing needs of businesses and investors worldwide, becoming more interconnected and accessible. This essay will delve into the rich history of the stock market, tracing its roots back to 16th century Europe and exploring its remarkable journey to becoming the complex, interconnected global marketplace it is today, influencing economies far and wide. We'll uncover the stories behind major stock exchanges, examine the impact of key historical events, and analyze the trends shaping the future of finance, providing insights into how past lessons inform present decisions. So, buckle up as we embark on this captivating exploration of the stock market's past, present, and future, uncovering the intricate web of factors that make it a cornerstone of the global economy. Our story begins in the bustling port city of Antwerp, Belgium, in the 16th century. Already a major centre for trade and commerce, Antwerp became the cradle of the modern stock market. Merchants, traders, and financiers congregated in its bustling squares and coffee houses, eager to invest in the burgeoning trade routes to the East and West Indies. These early investors faced a challenge: how to manage the risks associated with long and perilous sea voyages. Dutch merchant. The answer lay in a novel concept: sharing the risk. Instead of shouldering the entire burden of financing a voyage alone, investors began pooling their resources, buying shares in trading expeditions. This shared ownership not only mitigated risk, but also allowed individuals to participate in potentially lucrative ventures that would have been otherwise unattainable. Antwerp's bustling marketplaces became the first true stock exchanges, where these shares were bought, sold, and traded. Informal at first, these gatherings laid the foundation for the structured exchanges we know today. Word of this innovative system spread quickly, attracting investors from across Europe and laying the groundwork for the development of stock markets in other major cities. Dutch merchant. The concept of shared risk and ownership through stock trading proved revolutionary. It fueled investment in exploration, trade, and infrastructure, contributing significantly to Europe's economic expansion during this period. Antwerp's legacy as the birthplace of the modern stock market marked a pivotal moment in financial history, paving the way for centuries of economic growth and innovation. As the 17th century dawned, the center of the stock market universe shifted north to Amsterdam, a city that would soon become synonymous with financial innovation and global trade. It was here that the world witnessed the rise of a company so powerful, so influential, that it would redefine the very nature of global commerce, the Dutch East India Company, or VOSI for short. This company was not just a business entity, it was a force that shaped the economic landscape of its time. Dutch merchant, established in 1602, the VOC was more than just a company. It was a trading empire, a colossus that spanned continents and oceans. Granted a monopoly on trade with the East Indies by the Dutch government, the VOC commanded a fleet of ships that dwarfed even the mightiest navies of the time. These ships were the lifeblood of the company, enabling it to transport vast quantities of goods across the globe. These ships, laden with spices, silks, and other exotic goods from the east, returned to Amsterdam, reaping enormous profits for the company and its investors. The wealth generated was unprecedented, creating a ripple effect throughout the economy. The VOC's success was inextricably linked to the stock market, a burgeoning financial institution that would forever change the way businesses operated. To finance its vast operations, the company issued shares on the Amsterdam Stock Exchange, which had been established in the late 16th century. This innovative approach to raising capital allowed the VOC to expand its reach and influence. This marked a critical juncture in financial history, setting the stage for modern stock markets and the concept of public investment. For the first time, a company had issued stock to the general public, allowing ordinary citizens to share in the company's fortunes. This democratization of investment was revolutionary, opening up new opportunities for wealth creation. Dutch merchant. The public's response was nothing short of astounding. People from all walks of life saw the potential for profit and flocked to buy shares. People from all walks of life rushed to buy shares in the VOC, eager to partake in the riches flowing from the East. This surge in public investment fueled the company's growth and solidified its dominance. The VOC's success, fueled by public investment, cemented the stock market's role as a powerful engine for economic growth. The wealth generated by the company enriched not only its investors but also the broader economy. The company's innovative use of stock issuance set a precedent that would be followed by countless businesses in the centuries to come. This model of raising capital became a cornerstone of modern capitalism. However, the VOC's story also serves as a cautionary tale. Its eventual decline, marred by corruption and mismanagement, underscored the inherent risks and volatility that are inseparable from the stock market. The rise and fall of the Dutch East India Company remind us that while the stock market can be a powerful tool for economic growth, it also carries significant risks. Investors must always be vigilant, aware of the potential for both great rewards and great losses. Section 4. London takes the reins, the London Stock Exchange. As the 18th century unfolded, the global economic landscape continued to shift. The rise of British naval power and the expansion of its empire paved the way for London to emerge as a new centre of financial dominance.
In the heart of this bustling metropolis, the London Stock Exchange was formally established in 1801, solidifying the city's status as a global financial hub. The establishment of the LSE marked a significant step forward in the evolution of the stock market.
Unlike the informal gatherings that characterized early trading in Antwerp and Amsterdam, the LSE brought structure, regulation and transparency to the world of stock trading. The exchange established clear rules for trading, listing requirements for companies and mechanisms for settling trades, fostering trust and stability in the market.
The LSE quickly became a magnet for capital, attracting investors from across Britain and beyond. The Industrial Revolution, which was gathering pace in the 19th century, further fueled the LSE's growth.
Companies at the forefront of this technological revolution, from railway companies to textile mills, turned to the LSE to raise capital to fund their expansion, fueling Britain's economic dominance. The LSE's emergence as a global financial powerhouse underscored the critical role that well-regulated and transparent markets play in fostering economic growth and innovation.
Its success in attracting capital and channeling it towards promising ventures cemented its position as a leading force in the global financial system, a position it maintains to this day.
Section 5. Across the Atlantic, the New York Stock Exchange. Meanwhile, across the Atlantic, a new nation was taking shape, the United States of America. This fledgling country was built on the principles of freedom and opportunity, and it was in this environment that the seeds of the New York Stock Exchange were sown.
In the bustling port city of New York, a group of merchants and auctioneers gathered under a buttonwood tree on Wall Street in 1792 to sign an agreement that would lay the foundation for what would become the world's largest stock exchange, the New York Stock Exchange. This agreement, known as the Buttonwood Agreement, was a pivotal moment in financial history.
In its early days, the NYSE was a far cry from the bustling trading floors of today. Trading was limited to a handful of stocks, primarily government bonds and shares in a few banks and insurance companies. The exchange operated in a modest setting, with traders conducting business in coffee houses and on street corners. But as the United States expanded westward, so too did the NYSE's influence. The growth of the nation brought new opportunities and challenges, and the NYSE adapted to meet the needs of a rapidly changing economy.
The Industrial Revolution, which had transformed Britain, soon swept across the Atlantic, creating new industries and a burgeoning demand for capital. The NYSE played a pivotal role in this economic transformation, providing a platform for companies to raise the funds needed to build railroads, establish factories, and capitalize on the nation's vast natural resources. This period saw the rise of powerful industrialists and the birth of modern corporations.
The NYSE's growth was nothing short of remarkable. From its humble beginnings under a buttonwood tree, it evolved into a symbol of American capitalism and innovation. The exchange's ability to adapt and grow with the times was a testament to its resilience and importance in the financial world. The exchange's success in attracting capital and channeling it towards emerging industries helped fuel the United States' ascent to becoming a global economic powerhouse. The NYSE became a crucial engine of economic growth, driving innovation and progress.
The NYSE's story is a testament to the power of entrepreneurial spirit and the critical role that well-functioning capital markets play in fostering economic growth. Its rise to prominence mirrored the United States' own ascendance, solidifying New York City's status as a global financial center. The legacy of the NYSE continues to influence financial markets around the world, serving as a model for other exchanges and a beacon of economic opportunity.